All right, markets are dropping and inflation is not going down. It's the easiest way that I can put it for you guys. I'm not surprised. The CPI data report hinted on inflation not going down. The market wanted to ignore it. And just like we said in that video when the CPI was released, it's only a matter of times for things to come to light. Today, the PPI data report was released. For those that are unaware, again, PPI data report is the production price index report. It gets released on a free website that's available to all of you guys, bls.gov/PPI, and it shows that PPI rose 0.6% in February. You might be asking, okay, well, is that bad? Is that good? What does that 0.6% mean? Very simple. 0.6% is what it rose. The expectation was 0.3%. So it rose by double of what was expected. This is inflation on the production side of things that always gets passed down to the consumer. Remember, if manufacturers and producers are experiencing inflation, they still have to make a profit. So therefore, if they experience inflation, then they're going to increase their prices, and then consumers experience inflation. So it's a ripple effect. We've talked about this when it comes down to why production price index reports are important. We also have retail sales coming in higher than what was expected. Lower than what was expected, and initial claims coming in a little bit lower than what was expected. So overall, there was also, I think, a comment by Morgan Stanley or JP Morgan. I forgot who it was. I always get those two confused. But pretty much talking about that, hey, if we begin to cut rates too soon, especially with what we just saw with CPI and PPI, we might be doing a full circle of inflation going back up again. We need to get inflation under control. So we cannot cut rates too soon. And the market doesn't like that, right? Because the market's been waiting. The market's been itching to cut interest rates. Jerome Powell has said it many times before. And I hope you know that, like, I don't blame anyone for being extremely bullish, right? You're if anything, it makes complete sense on why you're bullish, because regardless of what we might think, the market's bullish. So it makes complete sense. You are following and dancing with the market. That's great. I respect that. But it's good to be aware that the market, based off of recent economic data, right, and inflation rates and all that stuff, it doesn't really have ground to be bullish. Jerome Powell, who's the head of the Federal Reserve, has said it before. The stock market gets ahead of itself. It tries to factor things in advance, and then if it gets it wrong, it corrects itself, and that's when overreactions end up happening, right? These quick corrections. Because for those that are unaware, again, I just want to make sure that I bring this to your attention so it doesn't catch you by surprise. Next week on Wednesday, we have an FOMC meeting. This is when Jerome Powell and the rest of the Federal Reserve come together and they talk about, hey, are we going to raise interest rates, keep interest rates the same, or cut interest rates? And again, the market's been itching. That's all the market's been waiting for. They want inflation to go down, not really because they care about inflation, but because when inflation goes down and it's under control, then the Federal Reserve can justify cutting interest rates, which will therefore make it less expensive for people like you and I to borrow money. But if inflation is not coming down, then the Federal Reserve cannot justify. And this is what you are seeing. Now, don't get me wrong. Market's incredibly bullish. And it still is. It's still trading within range. There's a common support range here. There's a common resistance range. I mean, even during my live trading session today, SQQQ was going up. And one of the things that I brought up to the attention of our beginner traders is making them aware that $11 is a very common resistance range based off of recent patterns for SQQQ. So to not hesitate to lock in profits, just like right now. I shorted the absolute crap out of Coinbase today. I'm up $30,500. I stepped on their neck, and it was just a day trade, right? I don't like to short these and hold them over a period of time. I left myself with my one lucky share, but I shorted the crap out of this stock because, again, direction was favorable, but I also need to give credit where it's due. This has been an incredibly bullish stock. So yes, I don't mind making money on the pullback, but we still need to wait for confirmation of an active sell-off, which we could get. And then at that point, if it begins to trade below the moving average, I would love to reopen a short position and make money as this thing sells off, because I think Coinbase is overvalued. But guess what? It doesn't matter what I think. Who cares, right? Who cares what you think? Who cares what I think? All that matters is what the market actually ends up doing. So I know that it's been incredibly bullish, so I want to give it the respect that it needs and respect it at a potential support range. If we get the break below, I'll reopen short. If it begins to indicate signs of a recovery, I don't have to go long. I'll just let it become overbought again and then short it on the way down. This is the beautiful thing about trading with no emotions, is obviously when an opportunity presents itself, you choose to strike, but as you get close to a riskier level when you're shorting, you just respect it. No emotions aside, no, this thing doesn't deserve to be up here. It needs to crash. It doesn't need to do anything, just like Tesla doesn't need to recover. This one's a tough pill to swallow for sure. And I feel for you guys. Tesla's been absolutely getting wrecked, and it's one thing over another, just consistent lower highs, lower lows. It just made new 52-week lows, I think, to 162. Is it 52-week lows? Yeah, I would say it's 52-week lows. Lower highs, lower lows. Actually, maybe not, because we hit lows of, yeah, it's not 52-week lows. We were at 158, but we're getting very close, and it looks like that's what it's working towards. So yeah, Tesla's oversold, but what do we know? That the cheap can always get cheaper. It just looks like it's a little bit more of a bearish day. And again, I'm very happy that I shorted the crap out of coin. I'm very happy that we were able to make money shorting. But don't get me wrong. Although I love shorting, we know that the market's incredibly bullish. So please do not do what Reddit traders do, and that's trade emotionally. Do not bag hold your position. Know what ground you're standing on. And we're still standing on bull territory. So we made our money. Let's take it. And until we get more confirmation, I don't think it makes sense to short just yet. The markets can bounce back very quickly. And why would you want to go through that roller coaster of emotions? Just my 2 cents. But you guys let me know what you think. Again, I like talking about the good. I like talking about the bad. And I just wanted to share both sides of what's going on and why the market was pulling on back today. I hope that I made it easier for you to understand. And if so, again, I hope that it earned a thumbs up. And if you have any questions that I did not answer already, feel free to comment down below. Again, I also would love to invite you to my live trading session. I trade live every morning. You heard me talk about them, my LPP team, and they get to watch me trade live right at market open. So when you are ready to tune on in, it's the second link in the description down below, and we're running a 50% off discount right now. So I appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.